Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have another Bitcoin/cryptocurrency market update for May the 13th. This is the third one this week, and again, it's got to do with how volatile the market is and how sketchy things have looked, and I want to kind of inject a little bit of common sense here, same way that I would do when things were in a bull market, saying be careful getting too bullish. You know, if things start to look bearish, I still want to be here saying, look, don't get too bearish. You know, don't get too emotional. There's some things that we need to look at in these charts. But before I jump into that, do me a huge favor, hit the thumbs up button, make sure you subscribe to the channel, and don't forget to check the description for a link where you can join the Patreon for just $7 a month. So listen, the thing about Bitcoin right now is it's doing exactly what we talked about the last few months. When this thing first started to come down, I don't remember if it was back here or back here, I went back in time and said, look, the top of this box on the weekly chart has historically been the area that Bitcoin corrects to in a bull market. And I'm going to kind of throw a little caveat here, okay? Technically speaking, I do not view this as a bull market, okay? And there's a very simple reason for that, and that has to do with market structure. So I'm going to talk about why this may be a correction, but first let me just kind of throw this out there. People have asked me, multiple people, and this is an idea that I put forth a few weeks back, that we could be going through a period similar to September of 2017. There was a very bad shakeout around that time. If you weren't in the market, it was pretty brutal, right? Total market cap of all crypto dropped under 100 billion. It was really looking like things were going to get nasty, and they did get nasty. So I hypothesized that, you know, we could be seeing something like that when we were back over here or maybe back over here. We're not in September of 2017. That doesn't mean Bitcoin can't go up, but it's not the same as 2017, and there's a very simple reason for it. Go back to September of 2017, take a look at the chart. What happened back here is this was a correction where we had an obvious higher high. This was an obvious higher low, all right? So when you look at this, you could put some Fibonacci levels on it. It was a perfect retracement back down to the golden pocket. Also came back down to that. You know, some people use the 21. I like to use the 19. Right now I've got the 20 on there because it actually looks a little more perfect than both those, ironically. But somewhere around that area, 19, 20, 21 moving average, right? Now, look at today's price action, and you're going to see something completely different, all right? What you're going to see instead is a higher high, a higher low, a higher high, a lower low, right? This is lower than this back here. A lower high, and this is trying its damnedest to punch in another lower low over here. That's not bullish market structure. That's the reason that we've got to be careful here, because this may not be a correction. This may actually be the start of something much more severe. Now, that being said, things have not changed. We still have a hidden bullish divergence on this weekly chart. Here's a lower low and yet another lower low, higher low, and this is actually a higher low than back here, right? So I do view this as a double hidden bullish divergence. We're coming down to the top of this box, which again, if you go back in time, you will see that in 2017 and even 2016, corrections came to the top of this box. Next move up, top of the box. Next move up, top of the box, next move up, top of the box, next move up. And it wasn't until we broke into this box that the bear market was actually in full swing, okay? You can see the same thing in 2020. Top of the box, little bounce, top of the box, consolidation on top of this box, big move up. Again, a correction from around 12K down to around 10K, back down to this moving average, back down to the box, and huge parabolic move off of it. So this could very easily be a correction, meaning that this still could go much higher before a bear market kicks off, like a true hardcore 80-90% drop type of bear market. All right, that is one positive thing, is looking at this, how it's coming down to the top of the box. Second positive thing is it's still technically inside this channel, right? So this could end up bouncing off the bottom of the channel. The third positive thing is so far this moving average is holding, whether you put it as a 19 moving average like I like, right? It's just slightly below that. If you put it as a 21, it's well above that. And if you put it as a 20, still above that. So somewhere in that ballpark, that moving average is holding so far. Number 4, it is still inside of this upward sloping channel. Yes, it threw a wick down or a tail down, but that could very easily be a bear trap that's just going to basically trap bears down here for liquidity and then move up, crushing their souls, right? So you have to be really, really careful. Now, yesterday morning, and I talked about this in my last video, I did sell off a pretty hefty piece of my portfolio. I didn't sell it all off. I still kept quite a bit, probably more than I should have in reality, but you know, I still kept most of it, but I did sell off a fairly big chunk of my portfolio when Bitcoin was around 54,590, right? So I did get out before this big dump on some of my Bitcoin. I sold almost all of my Ethereum, but around 4,000, 3,900 all the way up to like 4,100. I was like taking pieces throughout that range, right? So I did sell off as a way to kind of hedge or protect myself. And if it starts to go back up, then again, I have no problem looking at buying that back. But right now, I'm still holding about 2/3 or maybe even 3/4 of what I was holding, right? And just kind of waiting for this market to tell me what is next. Because again, structure looks different from previous corrections. This very well could be distribution playing out, right? But right now, I think it's a little soon to get too overly bearish, like I said, because we're on the top of this box. We're basically testing the bottom of this channel, testing the bottom of this channel, and testing that moving average. And those could act as support, and then things could absolutely skyrocket from there. The bad news, guys, is this. This is our 3-day bear market box. We were not supposed to come back down inside this box, right? Coming down this first time was not that big of a deal, but when we came back up out of it, we really should have moved up from there. Bulls should have stepped up and pushed that higher, but they were unable to. Not only were they unable to push it higher, but it's come back down inside the box and closed with a lower low. So now we have a lower low here. So you might say, well, it came back down in the box back here and it was okay, and back here was okay. But see, there's different structure. Came down here, higher low, rocket ship. Came down here, consolidated rocket ship. Came down here, lower low. That's bad. We also have this wonky double top. As I've mentioned in previous videos, I don't put special emphasis on double tops at the bottom of moves like this. I only care about them if they're at the top of a move like this one back here. But I do at least pay attention to them. Say, okay, well, there is a double top there, right? So again, we look back to the previous bull market in 2017. Wasn't unusual to come down inside this box, right? Even back here in 2015. But once price moved out of it, it didn't put in lower lows. It moved up off of it, took its next leg up, and then anytime it came back down into it, it tended to move right back out of it. I know some people are going to say, well, right here it's a lower low. Yeah, but see, it went way up first. Look. Go back and look at the price action. So here was this first one, right? Went up to around 1,000, corrected back down to 700 or so. Then it put in a lower low here, but price was much higher. So, you know, this was still like an upward momentum type of situation. That is not what we have now. What we have now is an area where price has put in a lower low, right? This is lower than this, and RSI has put in a lower low. So let me take these off of here. When you look at this 3-day chart, we've already got a lower low here, right? Here's your structure, higher high, higher low, higher high, lower low. There is your lower high, and this was your lower low. We've already got bear market structure on a 3-day chart, and that is a big problem, okay? And that's why I went ahead and took profits on as much of my portfolio as I did, because that is much more similar to all this action back here, right? Where you had your lower low in the 3-day, your lower high, your lower low, your lower high, your lower low, and your lower high, your lower low, your lower high, right? Anybody remember that? Right? Not good stuff, right? So we do have bear market structure, and I think it's extremely dangerous to ignore it. But I also think it's too early to get super bearish and start loading up on mortgage size shorts when the weekly chart has not yet turned totally bearish, okay? On a daily chart, we lost the 50-day, right? Which that was one that I was worried about. And as soon as it came back under it this last time and closed at it, it completely collapsed. I'm looking at this right now as basically a sideward range, right? So I'm waiting for it to break out of this range. Is it going to break south or is it going to break north? Selling volume, unfortunately, bulls, it's picking up. We're seeing an increase in selling volume, and that's the exact opposite of what you want to see. This bar has 24 minutes. Maybe they pop it into a green bar and this ends up being buying volume, right? We'll wait and see on that. On the 4-hour chart, we did fall below, right? This big zone through here, this volume. We did fall below the 50 and 200 moving averages. We did get a death cross, right? So there's some sketchy stuff. But one thing I'll point out is a lot of times with these death crosses, look what happens. See death cross right here? That was the bottom before the next move up. Death cross right here, which would have been right around this zone, right? Could be that it's going to get a leg up from there, okay? So again, I think there's too many mixed signals here to be getting too gung-ho one way or the other. I still think there's a lot of waiting to see what will happen when it comes to Bitcoin. If we take a look at the US 100, it looked like it wanted to bounce back, but bears pressed it back down. So that's still, mixed signals there. If we look at the US 500, it came up off of that 50 moving average that I talked about yesterday. So that was a good long play for somebody that had the courage to take it. I certainly did not take that trade, right? Stopped dead at the bottom of this range. So this is still one of those things where we don't know, is this a bearish retest that's going to have more downside, or is it going to be able to break back up into that supply? On the US 30, same thing. We fell out of the bottom of this range, but the good news is we were able to pop back inside of it. So now we're basically back in that supply / demand zone, right? Which one is it going to be? Is it going to be demand that presses it up, or is it going to be supply that presses it back down? So we still have some unanswered questions on the stock market, which leads me to believe that we're still going to have to wait and see a little bit on Bitcoin. But again, like I've been saying, if anything else, if you don't learn anything else from these last few days, please finally accept one truth, and that is the truth that Bitcoin is not a store of value, right? I think people simply forget how far Bitcoin has actually fallen. Everybody's over here still like celebrating this bull market, but Bitcoin today was down 29.12% from its high a month ago in April. And yes, it's been a month now. This is not bull market behavior. This is basically one of two things. This is either going to end up being distribution where people look back like, oh my gosh, it was so obvious, right? Or people will look back and say, well, no, that was reaccumulation. Of course it was reaccumulation. One thing to watch for, guys, and it's a bit wonky, but I think it's something you want to keep an eye on. This looks a lot like a left shoulder. This looks a lot like a head. And this looks a lot like a right shoulder. And when you look at the volume, you have increased volume coming off the head. And right now you're having increased volume coming off the right shoulder. Not what you want to see, right? If you're bullish, or even if you're not bullish but want to be, that's not what you want to see, right? If that does turn out to be a head and shoulders, depending on how you measure it, you could get a target down as low as, say, around $30,000 to even $35,000, somewhere in that zone on Bitcoin, right? And if you think alts have bled while Bitcoin fell back 29%, just wait till you see what they do when Bitcoin falls another 20 or 30%, if it falls another 20 or 30%. And again, if I sound happy about it, I'm not. I'm not happy about it. My OMG got completely demolished, right? Had that positive news break, but got absolutely smoked. It's now pulled back over 41% from its high last week. My EOS got completely wrecked, right? It had pumped up 61% on that news that they're launching their own cryptocurrency exchange. And then it pulled back 36% from that high, so basically pumped 567 and then dumped 549. So it's like it was all for nothing. So no, I'm not over here celebrating. I had a large drawdown over the last 48 hours, right, in my HODL portfolio, and that's always no fun. But that's part of the game, right? You're not going to catch every move, and if you try to, you're going to end up losing money, right? Sometimes that's just the way it works. And yeah, could I have done a better job with it? Could I have taken the profits, bought back lower? Absolutely. Should I have? Absolutely. But I didn't. And like I said, nobody gets every move perfect. Even when you think it's going to happen, even the best of us, right? And I'm not saying I'm the best. I'm just saying even the best traders out there, once in a while, they're going to fall victim to their own emotions and be afraid to pull that trigger in on those investments. Because I am so bullish long term, I'm always a little bit sketchy or a little bit skeptical of selling off pieces with the intent of buying back cheaper. So the video right now, it's about 15 minutes depending on how I edit it. I think I will wrap up with one last piece, maybe two last pieces, right? I would keep an eye on this. This is the total market cap chart, right? And this total market cap chart, if we're looking at this on a weekly, this is a pretty nasty weekly candle. This really needs to turn around and bulls need to push this back up, because if not, we're seeing some really massive selling volume here. And the other thing that I would wrap up with is good old Doge. We can't hardly do a video without talking about Doge. Guys, I'd be super careful with this one, right? Super duper careful. Doge is so tied to anything that Elon Musk tweets that if he says anything negative, this thing goes to shit real quick. And if he says anything positive, it goes up real quick, right? So when he went on Saturday Night Live, I guess he made a comment about it being a hustle or something to that effect. And of course, you saw an immediate reaction in the market, right? Now, I was already bearish on this. I thought it was ridiculous and that it would go down. I looked at it as a buy the rumor, sell the news event, right? These trend extensions point down to around 27 cents, and it was doing a good job of making its way toward that target. It had gotten down to about 35 cents. But then just a few hours ago, he tweeted something about working with the devs from Doge. And of course, Doge immediately reacts by pumping, right? It's now pumped. This is a 1 hour chart. So in the last 4 or 5 hours, it had a 38% pump. So of course, if you were short, that was probably pretty painful, right? Hopefully you had a stop loss. So this is not one that I personally want to trade. If you do want to trade it and you get it right, these huge moves can make for huge paydays. But I don't like trading an asset where something is that much out of my control. With most assets, you can pretty much follow the TA. And I will say Doge typically has some really nice TA. But unfortunately, it only takes, like I said, one tweet from Elon, and Doge might do something completely different from what you're seeing in the chart, right? So just not something that I would risk a lot of money on personally, but that's not saying that you should or shouldn't. That's completely up to you. All right, so there is Doge. All right, now all that being said, we're at 18 minutes, so I am going to wrap up there. Please remember that I am just some guy sitting in a spare bedroom, which means that I have been wrong before, and I guarantee you I will be wrong again. So you should always go out there and do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in the stock market, cryptocurrency, or precious metals. If you enjoyed the video, be sure and give it a thumbs up. Make sure you subscribe to the channel. And again, don't forget to check the description for a link where you can join the Patreon for just $7 a month. This is James, the Crypto Common Sense, reminding you to please trade safe.